In this video and the next, I will explain how homeowner mortgages work. Millions of people obtain a mortgage to buy a home and have never really been taught how they work. In this video, I will explain what it means to register a mortgage on a property title, what a first, second, or third mortgage means, and in part 2, I'll explain how mortgage payments are calculated and what amortization tables are, including how Canadian and American mortgages are different. I was first licensed as a realtor way back in the 1980s, and I spent many years working as a full-time professional real estate investor. My partners and I have qualified for dozens of mortgages ourselves, and I have helped many clients through the process of obtaining a mortgage of their own. Subscribe and click the bell notification icon. Now, some housekeeping before we get started. I am a professional realtor and have a background as a real estate investor, but I am not a mortgage broker nor a real estate lawyer. So what I'm explaining is not to be construed as financial or legal advice. In the previous video, I explained what a mortgage actually is. So if you've not seen that one, go back and watch that one after this. In short, what is generally referred to as a mortgage is a loan used to purchase a home. You've probably heard people describe a mortgage as being registered against a title or secured against a property. What does this mean? The fine details vary by jurisdiction, but some authority issues a title for the property. The provincial government in Canada and title companies in most U.S. states. The title will include a legal land description of the property, not just a municipal address. And this is an identifiable parcel number as identified in a residential subdivision, or in the case of a rural property, a portion as described in a provincial or state survey of the area, or a written description of a portion of that if a piece is subdivided out of a quarter or a section of land as per the original survey. The title will also include the names of the registered owners, the buyers, that would be you if you buy a piece of property, and your mailing address. There may be various caveats or restrictions on the use of the property, and we'll get into these in future videos. But when a mortgage is obtained, it is registered on the title of the property. Here is an example of a property title from the province of Alberta. You will see that there's a mortgage registered against this property in the name of a bank with a specified dollar amount, and there is an identifier number on that document or on that registration, and that mortgage itself can be pulled off the land title system so you can read the details of the mortgage. If the mortgage is paid as agreed, all remains as it is. When the loan is paid in full, this registration against the title of the property will be removed or discharged from the title, meaning that subsequent copies of the title that are issued will not have this mortgage listed. If the mortgage is not paid as agreed and remains seriously in arrears, then the mortgage lender may make application through the court to have the property sold. This is known as a foreclosure, and there will usually be something registered against the title to indicate this is happening. In some jurisdictions, this is called a certificate of lis pendens. This gives the lender the right to seek the sale of the property to ensure they will be paid. So, what happens if there's more than one mortgage? You may have heard the term first mortgage, second mortgage, or in rare cases even third mortgage. So what are these? And what are the differences between them? Mortgages and other caveats against the title of the property are registered in the order in which they may seek the property to be sold for payment in the event that they're not being paid as agreed. When you buy a home, the mortgage is registered in most cases in first place. This means that upon sale, this mortgage loan will be repaid first before any of the other proceeds of the sale of the property are distributed. Sometimes homeowners take out a second mortgage. Why do people do this? Well, if they want to take out an additional loan to complete a project in the home, an improvement, or another purchase. The interest rate is lower for a secured loan or one that is registered against a piece of property than one that is unregistered or an unsecured loan. Because in general, the risk is lower for the lender if they have a piece of property to guarantee the loan. This second or additional loan will be registered underneath the first mortgage on the title of the property, indicating that upon sale, the first loan balance must be paid out first, then the second loan balance, and then say a third loan balance, etc. So why is this done and why is it important? So if the property is sold, or if it has to be sold because one or more of the mortgages registered against the property are in default, the proceeds of sale will first go to pay off the first mortgage, then the one in second place, and if there's any remaining funds, the one in third place. This means that the risk for the second mortgage holder is greater than the first in the case that there's not enough money coming from the proceeds of sale of the property to pay out both loans in their entirety, and even greater for the third and following. For this reason, the interest rates charged by a second mortgage holder tend to be higher than a first, and a third mortgage higher than the second and following. In part 2 of how mortgages work, I will explain amortization, how interest and principal on the original loan amount are paid, and how US mortgages are different from Canadian ones. Do you have a mortgage question I haven't answered yet? Are there experiences with a mortgage or insights you'd like to share? Leave these in the comments below. I'll try to include these in future videos.